Acquiring a business? BizNexus simplifies it. Access thousands of updated opportunities in our DIY marketplace or supercharge team sourcing with OmniSource, your all-in-one platform for on-market, off-market, and coming-soon deals. Scale smarter today. Learn more or book a demo at www.biznexus.com.
Disclaimer from the Always Present legal team. Podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework.
You know, with all these headlines like just swirling around, about banks and recessions and all this stuff, it's kind of easy to get caught up in all the doom and gloom.
Yeah. For sure.
We're kind of going on a treasure hunt today.
Okay.
Looking at a corner of the market that I think a lot of people overlook, but it might have some real hidden gems.
Okay.
We're talking about the lower middle market businesses.
Yeah, these companies, they're not the ones you see making headlines every day, but they're really the ones that are driving, a huge part of the U.S. economy.
Right.
And what's really got us interested is this idea that there's this buzz building around this concept of a golden vintage for people who want to invest in this space.
Yeah, a golden vintage. That sounds really interesting.
Yeah.
But what does that actually mean? For someone who's like, hey, maybe I want to invest in this area.
Right.
Like, what does that mean for them?
Yeah.
Well, to dig into all of this, we're using some great analysis from Muzinich Co Financial Services. They put out a report back in June of 2023 that really got us thinking.
Yeah, and they highlight this really unique dynamic that's happening right now.
Okay.
You see, while the economy overall is definitely facing some challenges, a lot of these lower middle market businesses are actually doing really well.
Interesting.
They're poised to grow.
Okay.
But they need access to capital to make that happen.
Of course, yeah.
And that's where things get kind of interesting because the main source of funding for these businesses, small banks, they're hitting some pretty serious headwinds right now.
So we've got these lower middle market businesses that need capital, and small banks who usually provide that capital are maybe pulling back a little bit. What's the reason for all this tension?
Well, it all comes down to commercial real estate.
CRE.
CRE, you got it.
Okay.
Turns out small banks are holding this surprisingly large amount of commercial real estate loans.
Okay.
Way more than the big banks.
Wow.
We're talking like $1.9 trillion
Wow.
compared to just $884 billion held by the big guys.
Yeah. That is a big difference.
Yeah, it's a huge difference.
So why is that a problem now?
Well, with interest rates going up and a lot of commercial properties having lower occupancy rates now,
Right.
there's this real worry that a CRE crisis is brewing.
Okay.
And if those loans start going bad, small banks could be in a really tough spot.
So they might not want to lend as much money even to perfectly healthy businesses just to make sure they're protected.
Exactly. And that's where we see this capital vacuum starting to form.
Okay.
Lower middle market businesses need money, but their usual sources drying up.
Right.
That creates this gap.
Yeah.
And that gap is exactly where this whole golden vintage opportunity comes in.
Okay. I think I'm starting to see how the pieces fit together here.
Yeah.
So less lending from small banks means a bigger opportunity for other lenders,
Right.
specifically private credit.
Yeah.
Tell me a little bit more about that connection.
Sure. So what's really interesting is that even if small banks just reduce their lending a little bit, it could create a huge opportunity for private credit.
Wow.
One that's way bigger than the amount of capital that's currently available.
Interesting.
Yeah. Muzinich Co's report, they said that even just a 5% reduction in small bank corporate lending could lead to $39 billion in potential demand.
Okay.
That's a lot more than the estimated $29 billion in private credit dry powder that's just sitting there waiting to be used.
Wow. Those numbers are really something else.
Yeah.
But why is this considered a golden vintage?
Uh-huh.
Why is this not just any other private credit opportunity?
Right. Well, a golden vintage is basically when everything in the market comes together perfectly to create really strong returns.
Okay.
And this situation has a few things going for it.
Okay.
First, you have the size of the opportunity that we just talked about.
Right. The $39 billion gap.
Exactly. And then you have the nature of the lower middle market itself.
I have a feeling these aren't like the big tech startups that we always hear about in the news.
You got to lower middle market businesses are usually more down to earth and resilient
Okay.
than those bigger companies.
Yeah, makes sense.
They tend to be less volatile, which is a good thing when the economy is uncertain.
Right.
Plus, there are over 2,800 M&A transactions happening in this market every year.
Wow.
So there's a constant flow of businesses that are looking for funding.
So it's a really active market?
It is a very active market.
So we've got a large market opportunity.
Yes.
We've got a segment that's known for being resilient.
Yes.
And we've got a lot of deals happening constantly.
Mm-hmm.
I'm really starting to see why this is so appealing.
Yeah.
But what else makes this a golden vintage?
Well, purchase prices in the lower middle market are usually lower than for larger companies.
Oh, interesting.
So investors can get in at a bit of a discount,
That makes sense.
which obviously helps boost potential returns.
Right.
And on top of that, the higher interest rates that we have right now actually work in the lender's favor.
Yeah.
Higher debt pricing means better potential returns for the people providing the capital.
Okay, so we've got a large opportunity size. We've got a resilient market segment.
Yes.
We've got lower purchase prices
Right.
and a lending environment that's actually favorable.
Yes.
It really does sound like the recipe for a golden vintage.
It does.
But before we all go running out to invest, are there any downsides or things that we should be watching out for?
Of course. Every investment has its risks.
Right.
And this is no exception.
Okay.
Just because the market conditions look good doesn't mean that every deal is going to be a winner.
Of course.
You really need to do your research,
Yeah.
and you need to deeply understand the specific businesses and industries that you're looking at.
Okay, so smart advice.
Yeah.
So let's dive into some of those details.
Okay.
What are some of the key things that investors should be thinking about when they're looking at opportunities in this space,
Okay.
especially with this potential golden vintage happening?
All right. So one of the most important things to think about is industry selection.
Okay.
It's not enough to just say, hey, lower middle market is doing well, let's invest.
Right.
You really have to be strategic about what sectors you're looking at.
So even within this, potentially resilient part of the market,
Right.
some industry is going to be better than others?
Exactly. You want to think about industries that have like built-in demand,
Right.
no matter what the economy is doing.
Okay.
So for example, healthcare.
Okay.
That's a sector that tends to be less affected by economic downturns.
People always need healthcare.
Exactly. People still need to see their doctor even when times are tough.
Right.
Another example could be IT services.
Boy,
Businesses rely on technology more and more every day.
makes sense.
And that's not likely to change even if the economy slows down.
Right. Even like essential government services,
Yeah.
those are probably pretty insulated from,
Yeah.
the ups and downs of the economy.
Exactly.
So step one is to find those industries that have strong demand, even if the economy isn't doing so great.
Right.
What else should investors be looking at when they're evaluating specific businesses?
So beyond just the industry, you want to really look closely at the individual businesses themselves.
Okay.
Look for companies that have experienced management teams,
Okay.
solid track record of making money,
Right.
and business models that can handle some ups and downs.
So they can deal with the volatility.
Exactly. You don't want to just pick any company that happens to be in a good industry.
Okay.
You need to make sure that specific business is run well and that it can handle challenges.
So it's not enough to just pick the right racetrack. You got to pick the right horse, too.
You got thorough due diligence is super important.
Due diligence.
Yes, it's like peeling back the layers of an onion.
Okay.
You need to understand the company's finances,
Right.
see what their competition is like,
Okay.
get a sense of how much they can grow.
So you're not just looking for businesses that are resilient. You're looking for ones that can actually thrive,
Exactly, even if the economy changes.
even if things get a little rocky.
Right.
Okay, so industry analysis.
Yes.
Deep dives into individual companies.
Yes.
Check and check.
Right.
Is there anything else about deal structures that might be important in this golden vintage environment?
Yeah, absolutely. This is where things get really interesting
Okay.
from a strategic standpoint.
Right.
In a golden vintage, you might see more opportunities for what we call structured credit.
Structured credit.
Yeah, these are deals where the lender has more control
Okay.
and more protection if things go wrong.
Control and downside protection.
Yes.
Those sound pretty good.
Yeah, especially when there's still a lot of uncertainty in the market.
Right.
So yeah, those are definitely good things to have.
Can you give me an example of what a structured credit deal might look like?
Sure, so think about unitranche loans.
Unitranche loans.
Yeah, these are loans that combine senior and subordinated debt into one thing. It's a little bit more complex than a regular loan.
Okay.
but it can give lenders more flexibility and more potential upside
Okay.
while still being pretty secure.
So it's like a hybrid approach, a way to balance risk and reward that might make more sense in this market.
Exactly. And because a lot of these lower middle market companies,
Okay.
they have limited access to traditional bank financing.
Right, especially with small banks potentially pulling back.
Exactly.
Yeah.
So they might be more open to these structured credit deals.
Okay.
It could be a win-win.
Okay.
The businesses get the money they need, and the lenders get a more tailored investment that could be more profitable.
Makes sense.
Yeah.
But let's be real here.
Okay.
Even with a golden vintage and these structured credit deals, there's still risks, right?
Of course, no investment is completely risk-free.
Right.
Just because an industry looks good or a company seems well-run, it doesn't guarantee success.
Right.
There are always things you can't predict.
Okay.
Unexpected problems that can come up.
So you're saying diversification is still important?
Exactly. Don't put all your eggs in one basket.
Right.
Even if that basket looks really shiny because it's part of a golden vintage.
Yeah. Spread those investments around.
That's right. And another thing to remember is that private credit investments,
Okay.
they're usually less liquid than, say, trading stocks.
Okay.
It's harder to quickly sell your investment if you need cash fast.
So you're not going to jump into this for a quick buck.
No, you need to be thinking long-term.
You need a longer investment horizon.
Exactly. If you're looking to make money fast, private credit is probably not the right place for you.
Okay.
But for investors who are comfortable waiting, who are willing to do their research and be patient,
Okay.
this could be a really rewarding area to explore.
So we've talked about industry selection.
Yes.
We've talked about doing deep dives into companies.
Yes.
And the potential benefits of structured credit deals in this golden vintage. What would you say is the most important advice for someone listening to this who's thinking, this sounds really interesting, but where do I even start?
The first step is always education.
Okay.
If you're not familiar with private credit and the lower middle market, start by learning as much as you can.
Okay.
Read industry publications.
Okay.
Attend webinars.
Okay.
Connect with experts.
So do your homework.
Exactly. The more you know,
Right.
the better decisions you'll be able to make.
So it's not just about reading reports and articles, though, right?
Right.
How important is it to actually connect with people who are working in this space?
Networking is incredibly valuable.
Okay.
Talk to people who are managing private credit funds.
Okay.
People who are putting deals together.
Right,
People
right.
who are investing in these lower middle market businesses.
So get those insights from the people on the front line.
Exactly. Their insights can be super helpful.
So hit the books and hit the networking circuit. Sounds like a good plan. Is there anything else our listeners should keep in mind as they start this golden vintage adventure?
Well, I think one thing to remember is that you really got to do your research. You got to look under the hood.
Yeah.
And that's what makes this such an interesting space.
Okay.
It's not just about, making money.
Right.
It's about maybe playing a part in helping these businesses succeed.
Right.
And contributing to the growth of the economy in a really real way.
Yeah. Like from the ground up.
Exactly.
Yeah. I like that perspective.
Yeah.
It's not just about chasing returns.
Uh-huh.
It's about being a part of something bigger.
Absolutely. And for investors who really connect with that idea,
Totally.
who are passionate about supporting the backbone of the U.S. economy.
Those lower middle market businesses.
Exactly. Those businesses that don't always get the attention they deserve.
Right.
This could be a really fulfilling journey for them.
Well, this has been a fantastic deep dive.
It has.
We started with all those headlines about banks struggling and all that. And now we've uncovered this potential golden vintage in the lower middle market.
We really went deep.
Yeah, we talked about the challenges that small banks are facing, the impact that could have on lower middle market businesses,
Right.
and how private credit might be able to step in and fill that gap.
Exactly.
And of course, we talked about how important research and due diligence are,
Yes.
and strategic decision-making for investors who are thinking about getting into this market.
Absolutely. You can't just jump in blindly.
So if there's one key takeaway that I want our listeners to remember, it's this.
Okay.
Don't be afraid to look beyond the headlines.
Yes.
Don't just focus on those surface-level trends.
Right. Sometimes the best opportunities are the ones that are hidden in plain sight.
Exactly.
Yeah.
It's all about perspective,
Uh-huh.
seeing challenges as potential opportunities instead of roadblocks.
I like that.
And in this case, the potential in lower middle market private credit,
Yes.
it's not just about making money.
Right.
It's about making a real impact.
You can really make a difference by providing capital to these businesses that are so important for the U.S. economy.
Well said. It's been great having you on the show.
Thanks for having me.
And to our listeners, I hope you keep learning and keep exploring and keep digging for those hidden gems.
That's great advice.
That's a wrap on today's deep dive. We'll be back soon with another fascinating topic. Until then, stay curious, stay informed, and as always, happy investing.
Thinking of exiting your business or taking on a private equity partner to help you grow faster? BizNexus has you covered. Tap into our network of thousands of best-fit investors, acquirers, and proven M&A advisors, and we'll help you begin the relationship confidentially on your terms, your timeline. Learn more at biznexus.com.